morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're diving a little bit into the financial results of two Canadian publicly listed local giants. Of course, we're talking about CIBC Caribbean as well as Scotiabank Trinidad and Tobago for their fiscal years ended October 2025. Now, both groups would have reported contrasting fortunes for their respective fiscal years. Let's take a look at what the groups would have reported and what investors might expect in the months ahead. And of course, are these right stocks for your portfolio? Well, turning firstly to Scotiabank Trinidad and Tobago for that fiscal year ended 2025, the group would have reported an earnings per share figure of $3.95 per share, an increase of 5.7% from the $3.73 recorded in that prior comparable period. Driving these earnings results was a creditable improvement in net interest income, up 7.7% from 1.43 odd billion to 1.54 billion, with total revenues increasing ultimately 7% from 1.95 odd billion to just under 2.1 billion TT dollars. Of course, the first time in the company's or the group's history, as reported by that particular company. Non-interest expenses up just about 5.3% from 840 odd million to 884 million. Ultimately, profit after tax up 5.7% from 658 odd million to just under that $700 million mark. Now, when we take a look at the breakdown of revenues and revenue trends over the past few comparable periods, we can see that it has generally been an upward progression in terms of revenues. Our revenue growth increasing in terms of pace from 3.6% in that prior comparable period to 7%, with net interest income increasing that 7.5% odd, while other income would have improved just about 5 odd percent from 516 to 542 odd million dollars. In terms of expense controls, well, Scotiabank is one of the most efficient banks in terms of controlling its non-interest expenses, and we can see that in terms of its efficiency ratio, where lower ratio is a better or improving signal. And we can see over the comparable fiscal years that efficiency ratio decreased from 43.1% to 42.4%, notwithstanding the increase in non-interest expenses, of course. So what that translates into, roughly speaking, for investors is that non-interest expenses are growing at a slower rate than revenues, which is always a good sign ultimately for improving profitability. When we take a look at the balance sheet composition of Scotiabank Trinidad and Tobago, we can see that total loans were pretty much stable, growing marginally from 21.3 to 21.6 billion. There was a fairly significant increase in investments, up around 7 to 8%, from 6.6 billion to 7.1 billion in that yellowish segment, and other assets relatively stable at around $3.6 billion over the comparable period. So ultimately, balance sheet or total asset growth fueled by investments as well as modest loan growth, which means that investment or income generating assets form a higher composition of Scotiabank's overall total asset base, which again is good news for investors and positions the bank well for coming financial periods. From a valuation perspective, Scotiabank is trading at a price earnings ratio of about 12.2 times, which is above the sector average of just about 9.4 times, but on a historical basis remains quite attractive relative to its own historical norms as well as banking historical average multiples over the past several years. So at a price again of that $48 odd, that Scotiabank is trading at that price earnings ratio of about 12.2 times, as mentioned, above the sector average. However, it offers investors a fairly generous dividend yield of about 6.3%, which is considerably above the sector average of 5.2%. So with revenue growth and attractive dividends in mind, somewhat elevated valuations, and of course ongoing market uncertainties in the domestic environment, particularly with certain fiscal policies that are set to take place in fiscal 2026, Bourse is maintaining a market weight rating on Scotiabank for the time being with a watch outlook. Turning very quickly to CIBC Caribbean, well, for the fiscal period ended 2025, the group would have reported an earnings per share figure of 66 cents, which is a 43% decline from the $1.15 recorded in that prior comparable period. Now, total revenues declined 5.2% from just around the $5 billion TT equivalent mark to 4.7 billion. Operating expenses increased 5.9% from 2.96 odd billion to just about 3.1 billion. Ultimately, net income attributable to equity holders declined just about 43% from 1.8 odd billion TT equivalent to just around the $1 billion mark. Now, when we take a look at revenue trends for CIBC, we can see that there was somewhat modest decline in net interest income, but we can call that relatively stable at around 3.6 billion TT equivalent, with operating income declining just about 18% from 1.38 odd billion to just about that 1.12 odd billion mark. That ultimately 5.2% decline. And when we take a look at PBT by segment, there were some notable changes, a roughly 120% increase in personal and business banking contribution to PBT from 231 to 506 million in that orange segment, a decline of about 80% in corporate and investment banking PBT from 1.6 billion TT equivalent to just about 1.13 billion TT equivalent, and a swing from a profit to a loss in that wealth management segment from 61 million TT equivalent to just about 322 million TT equivalent loss, again related to some one-off expenses which the bank would have incurred in its recently concluded fiscal period. From a valuation perspective, CIBC, with those results, are now trading at the higher end from a valuation perspective at price earnings ratio of 12.5 times at its $8.20 a price, relative to the banking sector average of just about 9.4 times. However, it does offer investors a dividend yield of 4.1%, below the sector average again of 5.2%. But importantly, CIBC does remit its dividend payments in US dollars. So with that lower revenue in mind, relatively elevated valuations, though somewhat attractive when considering that US dollar dividend payment, as well as the market uncertainties, as mentioned, related to Scotia and all of the banking and insurer companies, of course, that are set to take place in fiscal 2026 onward. Bourse is maintaining its market weight rating on CIBC for the time being with a watch outlook. But that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at info@boursefinancial.com. And of course, you can check out all of our research absolutely free at our website, bourseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.